Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Scott Melker, a crypto trader and investor, host of the Wolf of All Streets podcast, and also author of the Wolf Den newsletter, which, by the way, on Monday, releasing its 500th newsletter. I mean, Scott, where does the time fly? Certainly, there's so much to talk about in your space, and today, I want you to help us make some sense. What's going on in the crypto market, particularly around Luna, stablecoins, what's going on there?
Listen, we often talk about fear, uncertainty, and doubt in the crypto market, and sometimes that's irrational, and sometimes it is very rational, and this is highly problematic. The problem here is that stable coins can be a misnomer when applied to the wrong kind of asset, and an algorithmic stablecoin is not, in fact, stable when it loses its peg. So this is not the same as a USDT or USDC, which is backed dollar for dollar, easily redeemed. This is something that was backed by volatile assets. And when the market saw extreme volatility, that peg failed. They had to sell off Luna. And we've seen, obviously, what happened to the market. This thing went from basically $100 to now, as I'm looking at it, just over a penny. And the biggest problem for me is that this seemingly gives the regulators and the Washington pundits and the talking heads who have been criticizing the space for so long a whole lot of fuel for the fire, right? They can say, see, I told you so. Stablecoins were a systemic risk to the market. This failed. Bitcoin followed. Everything else did. When in reality, this should have been viewed as a speculative volatile asset and not a stablecoin. But it's really painful to sort of watch your space shoot itself in the foot to some degree.
Yeah, Scott, I would agree with you, particularly when you think about regulators and talking heads. If we want to remain competitive and innovative on the global scale, we have to continue to, think about the positive aspects and not focus just on one thing. You have to remember, too, that the asset class is young, right? So we're learning as we go along. But in fairness, though, when we think about security in the crypto space, keeping it safe is important at the end of the day.
It's absolutely important. It's one of the most important things. And I think it's one of the things that the mainstream struggles with, and is one of the reasons that a lot of people who are at least superficially interested in buying or thinking about it for the first time get scared off, because they don't really understand how to secure those assets. They don't understand what they can invest in and can't invest in, which one of those things are safe, which one of those things are risky or volatile. I think this is a perfect example. Listen, some of the smartest hedge funds in the world were massively exposed to Luna and to UST, the stablecoin, because they were staking that stablecoin for 20% yields. This is how people were making a lot of money. And very few people outside of maybe Sam Bankman-Fried and a few others who said, you know how this is going to end, really started raising the red flags and saying, listen, if there's volatility in this market, we're going to have a problem. So I think, we have to step back sometimes and take a good hard look at ourselves. And I think that this was problematic, and we have to understand that people looking in from the outside are going to say, wait, I'm not sure I want to dump my money right now into this asset class.
Right. Well, sentiment is ugly. I think the market's a bit oversold here, and we can debate the fundamentals around it. But what are you seeing in the charts? Because the price is going to be king at the end of the day.
Listen, as you've probably seen me saying on Twitter for the last 2 or 3 days, I've been on the borderline of puking as I've been buying everything in my path, right? I see these as generational buying opportunities, even if it continues to dip. My conviction in the asset class, I'm buying stocks as well, by the way, but my conviction in the asset class has not changed at all. I still think that Bitcoin is the most important asset on the planet, and a simple crash of a stable coin is not going to change my mind about that. So I see this as a massive opportunity, whether it continues to go down, as long as you have a low time preference and obviously are looking at years and decades down the road. But yes, I bought Bitcoin at 33, 30, 28, 26, standing orders all the way down here, trading around 29. Technically, I think for now, the bottom is likely in for now. I've been specified for now. I think we get one of these sort of float up. We had this massive overreaction, oversold, too much panic, too much despair, people talking about it going to zero. It's over. When you get that time when you literally can't find a person who's saying anything good, and people are now saying there's nothing that can possibly happen to make the market go up. For me, those are the best bottom signals in the world. And I think for now, everything's oversold. We have bullish divergence. We finally have had capitulatory volume today. I mean, the biggest 4-hour volume candle that we've seen on Bitcoin exchanges in basically years happened today. And that was buying, at the end after a massive sell-off. That's what you want to see, at least to form a temporary bottom.
So, Scott, do you think institutional adoption, which is what the space wanted, is influencing crypto to the point where especially larger coins are so correlated to the stock market. I mean, I've heard a couple of people, of pundits talking about, oh, as goes Nasdaq, as can go crypto. That's kind of not what it was meant to be. I wonder if institutional equity and bond trading principles are being applied to it to the point, and we know institutions move the markets, that, you know, perhaps it's scaring retail a little bit here.
I agree. I think it's a double-edged sword, right? You cheer institutional adoption, but then what you get is it trades like a tech stock, right? And not even the best tech stock, to be quite frank. So it's obviously seeing that sell-off. It's liquid 24/7, 365. When it's a weekend and a hedge fund wants to panic and they can't sell their stock, they can certainly sell their crypto and Bitcoin and get liquid immediately. And I think that's highly problematic. Listen, you have to, at this point, look back and say, what was the dead top in 2017? Right? What was that dead top? Well, it was when CME started offering futures, right? And what was the top really in 2021? Well, it was kind of when Coinbase, started talking about listing those things. And what was the top in October, basically, of 2021 after the next rise? The launch of the futures ETF, right? We've given Wall Street the ability to play their games with our asset class. And I think that gives us a very short term. I still view it as a temporary correlation. Long term, if you zoom out, I think Bitcoin will, remain or will prove itself eventually as a hedge. It's a deflationary asset. I mean, scientifically, mathematically, it should be a hedge against inflation. It's just that right now, when everything goes risk off, correlations go to 1. We talk about that all the time. When everything's dumping, you're not going to see an asset class that performs particularly well in the face of that.
Right, especially when everyone is parked in cash until we get the capitulation, whether it's in the crypto markets or the traditional asset classes. But Scott, to wrap up here, let's put this into perspective, because at the end of the day, crypto isn't just about trading and valuing coins. I mean, the infrastructure underneath it is literally transforming and evolving the financial services as we know it. It's a big deal.
And that is the point that matters, right? And the reason that even above all of that, I'm a long-term investor and I'm interested in buying these assets in the first place. There's Bitcoin and then there's everything else, right? Obviously. So Bitcoin you can view as digital gold, store of value, deflationary asset. But all of these other projects are building the underlying technology for almost everything that we'll do in the future. You don't think about how your cell phone works, you just use it. You don't think about how your internet works, you just use it. Soon you're not going to think about how all these future technologies work. They're going to be based on a blockchain and you're just going to use them. That doesn't mean that the coins that we see now have to rise in price or that some of them can't go to zero or that they're not speculative assets. But it means that the future is being built on the blockchain. That's undeniable. And now is your opportunity, while there still is volatility and while it is still early, to get in on those investments with those outsized up, potential gains.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.